So today's date is August 3rd, and if you are in the US, yesterday, Friday, closing of the market, it was all but reporting that we are in a complete free fall decline, a recession is happening, stocks are falling, and as an investor, anybody in finance, we're all screwed. Today, as recording this Saturday, my news feeds everywhere, my timelines everywhere, everybody's talking about this crash that's happening. And I'm like, who cares? Listen, I've lived through in my lifetime 4 of these crashes, if this is actually going to be the 4th one. And now I've come with a certain amount of wisdom and understanding and clarity. And out of these 4, 3 of them, I was in it as an investor. I had money at stake, and now I feel like I can speak a little bit more confidently about this. The first crash would have happened in 2000 with the dot-com bubble crash thing, and everybody lost a lot of money there. The second one happened in 2008, 2009 with the housing crash, something then I was invested in. I had a TSP, the government's version of a 401k. And so I started my journey in the negatives, okay? Then the third one was COVID that happened 4 years ago. And if this is the 4th one, this would be the 4th one. So now we enter a recession. I'm seeing all these articles of all the red arrows are going down, everything's crashing, but I'm gonna tell you a secret. I'm gonna let you in on a little insider trading, if you will, for me personally. My portfolio, even at its worst, is still good. What recession? What crash? I'm doing just fine. And you want to know why? You want to know what my secret is? I just kept on investing. I stayed invested because now I actually understand during the hard times, and I've gone through enough hard times, we all have, but now as an investor talking financially now, these hard times, if you just dollar cost average, keep on putting a certain amount that you can comfortably do and still have a lifestyle every single month, just stay consistent with it. It doesn't matter what the market's going to do, because I promise you that the market's going to bounce back. It always does. Statistically, at its worst, you have 10 years before you might even see returns, but you will see returns at the worst, and we haven't seen the worst. There are people who've gone years, many years, where they were just always in the negative, and that does something to you psychologically. I get that. I do understand that. But look, I'm not retiring. Good chance, because I see my demographics. I know what the analytics say for these videos for my channel. You're not retiring either. None of you guys are at retirement age, and if you are, there's a good chance that with your proper financial advisement, if you actually, done this for a long enough time, you have enough bonds and stuff that you have some stability that the market doesn't really matter what's happening for your case. And if that's not the case, then I'm sorry, bad hand. You just got to wait it out, go back to work. I don't know what to tell you, but you have to play smart to your age demographic here. And a lot of you guys aren't actually in trouble. It's good news now to talk about, this is good clickbait right here. This is good to drive traffic and fear, because fear, just like Twitter or anywhere else, we're just there's rage baiting and fear baiting. This stuff sells because it's an emotional response. But I'm here to tell you today in this video that none of it matters. Don't worry about it. I promise you we will be okay. It doesn't matter how long this lasts, if this is actually a recession at all. There's an indicator that there is, but it doesn't really change anything. If you hit economic hard times, you lose your job or whatever the case, then you got more things to worry about anyway, besides just your financial investment portfolio of sorts or your real estate. You just gotta get through your day to day. But assuming all that's fine and we're just staying the course all the same, your portfolio will be fine. Just leave it alone. Just keep dollar cost averaging. Don't put more in than you can afford. Don't take your money out because you're seeing a lot of red and you're like, I'm losing money. I say this all the time, but it doesn't matter what happens this year or next year. What matters is when you're 60. When you're 60, if you watching this video, you're not 60, then it doesn't matter. Don't worry about it. If you're close to 60, I hope you got some bonds. I hope you got your portfolio aligned correctly and allocated as your age would dictate that. And if you haven't, then again, I'm sorry. But for all you other guys that here's what I did last time in 2020. Here's what I did right. Here's what I did wrong. And here's my lessons of what I learned for what I did wrong. What I did right is I didn't cash any of the money out. I had a proper amount that I was able to put towards every single month or every pay period. So every 2 weeks for me, I was doing that consistently. And then by April, I was like, oh, this stuff is pretty bad, right at the very start of COVID. And I bought a lot of Tesla, Apple, Starbucks, Microsoft, you name it, all these known brand companies. I just bought a lot of them because they're staples. I was betting on these companies. The only thing that you need to worry about when investing is, are you betting on America or are you betting against America? That's the only real thing that you have to consider when investing. If there's a little bit of risk, which everything has risk, but if the risk that you need to look at is what are you betting on, it's not the stock is gonna do good, or that tech is gonna do good, or consumer goods are going to do good. It's that America is going to do good. As long as I was investing in American companies, I was doing great. So that's what I did. And I will tell you what I did wrong is that I didn't diversify enough. I was very tech heavy. I focused specifically on individual stocks. Now this time, over the last 4 years, I have allocated my portfolio to be that of index funds. So that way I have greater margins. Especially when we talk about dividend returns. All my dividends now, most of my dividends, the companies that pay dividends like Apple or T-Mobile or Microsoft, that's just because I was investing in the technology company that just happens to pay dividends, but I'm invested in Tesla. They don't pay dividends and I don't care. But when it comes to dividend returns, having a consistent income every month or every quarter, every half a year or annual, I really have now allocated my portfolio to be that very spread out. So that way I mitigate my risk and I have a consistent dividend growth that's happening over time. I didn't do that back in 2020. Over the last 4 years, I've been doing that, and that's what I'm going to continue to do now. So I don't really care what's happening to the stock market today. If prices are down, I'm still gonna buy $100 or $200 or $500 worth of something every single month, whatever the number may be. I'm just gonna get more of that. It doesn't really matter. So don't worry about it. Don't panic, calm down, breathe. It's gonna be okay. I promise.